Hi guys. Alright, today we'll be diving straight on how to create an account on centralized exchange. Okay, first and foremost, let's go to our Play Store. For those of you who are using Android phone, please go to your Play Store. While for those on iPhone, you can use your App Store. Okay, now straight to our Play Store. Here I'll be searching on Bybit. Now I'll be searching on Bybit. Okay, alright. So this is Bybit. This is my Bybit here. Okay, so I already have the Bybit in my app, so there's no need for me to do that. So I'm going straight to my Bybit because I already have a Bybit account. All right, so I click on it. Now this is my Bybit. Okay, so I'm going to be signing up. For those of you that don't have Bybit account, please, you have to sign up first. Okay, but if you already have a Bybit account, just go on and log in. So let us sign up. For those of you that don't have, what is required of you is your email or your phone number. So if you put your email here, for instance, let's say okay, this is the email I'm using. Okay, then I say sign up. What is going to happen now is that I have to put in my password after I've been able to play this puzzle correctly. Okay, very good. So it is not successful. They send me a code into my email, right? So I'm going right there into my email to pick the code. Okay, the code have arrived. Okay, now I am slotting in my code. Now you see my code. Now I'll be asked to put in my password. All right, so this is it. So that's how it goes for now. So I'll fix my password. Let's head straight. So having opened my Bybit, so that's what happens. That's how it actually looks like. So I can decide to go to settings. Okay, I want to set now my Bybit. I want to choose. I want it to look the way I want it to be. All right, so you can see my profile here. I can choose to change the profile pictures or whatsoever, the both there. I can change my nickname. All right, this is my, okay, this is my, let me show you something, please. Okay, this is my UID. UID here is just like your identification number. Okay, so here you can see how you can secure. Here you can also secure your account. Like you want your account here to be on fingerprint or on code. Okay, you can go to your security and get that done. Here is to know how much fee. Okay, how much fee, all right, you'll be paying per trade. Just like what happens in your bank. If you want to pay in money like in your bank, there's a little percentage of deduction every bank, you know, gets from you. So that's actually, you want to know about the fee rates. This is where it happens. Okay, this sub account, you have an account, a sub account inside of this account. You also want to link your account to your social medias or what have you. So these are all where these things happen. So here also you want to change the dark, you know, theme of your bbyte. You can go up here and get that done. Okay, let's click on it. You see it, for instance. Okay, so that is it on this. So let's go back so we can continue. Okay, now this is the home page of my bbyte. Currently in this very account I have like $20 there. Okay, yeah, okay, you can see it here. I have $20 in this account currently. Okay, so now if you look down here, you will see this is the home page. Okay, this is indicating the home page, how the home page actually looks like. You will see many menu, buy crypto deposits, airdrop hunts, you know, copy trading, invite friends, and all of that. The next one is your market. Market here. Click on it. Click on your market. Now in your market, this is where you see the different kinds of coins, different kinds of currencies. Okay, different coin on spot, on derivatives. You will see them. You will see favorite ones. You will see hot ones, the ones that are hot currently in the market. You will see the pre-market ones, okay, the oncoming ones, the ones that are even yet to enter the market. You see the new ones, you know, what, you know, people, you know, new coins that are coming up. You will see new coins. You will see the gainers, the turnover, the opportunities, and all of that. Okay, so let's proceed. So that is it. So let's proceed. That is it on the market. Okay, so the next one is your trade. Next is a trading platform. Okay, so that will take us to, we are coming back to this trading because we have a whole lot of work to do here. Let's go to the earning. Let's go to our earning. Okay, here you can also earn other bonuses. Okay, when you stake USDT, when you stake your coins and all of that. That's what you gain here. It gives you opportunity to earn easily, earn in different ways. All right. Now let's go to asset. Now this is your asset. Your asset here also means your wallet. So this is a wallet that the centralized exchange provided for you. So they are in charge of the wallet. It's not an external wallet. It's not like this is an external wallet. This is a wallet they built inside of this centralized exchange. That is why it is called centralized. Centralized means that someone is in charge of it, not you. But when we say decentralized, it means that no one is in charge. You are the one in charge of it. So this is a centralized exchange. Simply means someone is in charge, and that is why when you will be doing your KYC and all of that, you are required to put in your details, your numbers. You're required to put in your identification numbers and all of that. That is the KYC you're doing. Simply someone is in charge of this. Okay, so now if you look into your wallet or your asset, you'll see there are two types of account there. We have the funding account, this one, and we have the unified trading account. Now this funding account is an account where you receive money whenever someone transfer money into this very account, into your exchange, centralized exchange. Whenever someone make transfer or whenever you make deposit into this very exchange, the money comes to your funding account. This is where the money comes to stay. Now, your unified trading account is an account where you are to transfer the money you want to use for trading. Let me assume you want to trade now. Before you can trade, you must first of all transfer your money using this transfer button here. How does that happen? Let me click on the transfer. Now, you see what happened. So it is telling me that I want to transfer money from funding account to my unified trading account. So if that is what I want to do, I will select what currency, what coin. Is it USTD? Yes, I want to transfer USTD. If it's not USTD, you will click on this arrow beside it and select the one you want to transfer. So once that is done, you will put the amount you want to transfer. Let's say I want to transfer only $1, since I'm having just $2 remaining in that account. Okay. Then when I put $1, I will click on confirm. The money will automatically go down to my unified account. Now I moved in $17 into my unified trading account. So that will take us back to the trading, where we are going to trade. That is this place here now. Okay, so I said we are coming back to trading because we have a whole lot to explain there. Now in this trading, there are two interfaces in your trading. Okay, for those of us that are using phone, there are two interfaces in your trading. You can see one here. Okay, this is the charts interface and this is the logbook interface. Currently we are on the logbook interface. All right, so let us start with that first. Now at this logbook interface, if you look up here, you will see a place where we wrote isolated. All right, now what does this isolated means? Isolated simply means that I want to use a particular amount to trade, and please, this is the only amount I want to use. Don't encroach, don't don't touch another money. Let me say I have $2 now, or I have $3 to trade. You can see it here. I have 2.9 equivalent to $3. Okay, that's what I have here to trade. I'm telling the exchange that this $3 is total money I have here, but let me assume that I want to use $1 to trade. I'm going to be entering $1 now, okay? But then I'm telling it that, please, I want to isolate $1 for trading. That is the essence of this isolating. I will be isolating $1 for trading. So out of these $3 that I have, that's $2.9 that I have, I'll be using $1 to trade alone. And please, if anything happens to that $1, do not enter the remaining ones that are remaining. Just use only that one. If the market goes against me, please don't touch another money. Just only that $1 that I will be using. But let me open the isolated position so you can see something. we have isolated, we have cross, we have portfolio, we have more detail. Now, if I'm selecting cross, let's say I selected cross, I'm telling the exchange that okay, I have $2.9 here, but I want to use only $1 to trade. So in case that $1, the market goes against me and that $1 finishes, please, you have the right to enter the remaining money within this $2.1 and continue the trading. Perhaps I will be successful. So that's the essence of using cross. They're telling him you can cross over to the remaining money and continue the trading, because it's the way trade goes. Sometimes the trade will be as if it's against you, but it will definitely kick up to favor you later. Okay, so but while it's against you, it might finish the one you kept aside for that trade alone. All right, okay. So now that is the difference between isolated and cross. But for now, as a beginner, I always advise you use isolated, so you can just be you'll be mindful of the risk you're taking. Okay, so that is it. Now the next one is what we call leverage. Let me open it. We have one leverage, 1x, 2x, 4x leverage, 5, 10, 25, 75, even some have 100 leverage. What does this leverage means? Leverage is a way of saying that, can you lend me a percentage amount to complete my trading? Let me say you have $1, and this Dodge USDT here, the Dodge USDT coin you want to trade requires $20, right? But you have only $1 to trade. Now you can decide to say, let me use a higher leverage. For instance, let's select like 25 leverage. So you're saying now that your $1 multiplied by 25, that means I've given you $25. In other words, now $25 simply means you have reached the criteria, because Dodge say you need $20 before you can trade here. But now with the help of leverage, you have reached the criteria to trade, even when your money is not up to $20. You have only $1, but now leverage have helped you, have lifted you up like a ladder that place you on an opportunity zone where you can actually trade, even though you have $1. But now with the help of leverage, you can now enter Dodge. I don't know if that's clear to you. So leverage helps you to position trades that you don't actually have the funds to. Okay, it multiplies your position ability, it multiplies your opportunity to trade, and as it multiplies it, of course, it multiplies your profits. If the market goes in your favor, the profit also comes higher. But if the market goes against you, you also lose highly. Is that okay? So that is it on leverage. Let's look at limit. This is what we call limit order. Okay, we'll be opening it so we can see what is there. You have limit, you have market, you have conditional, and so on and so forth. For the sake of this tutorial, we'll be using limit and market. Okay, now what does limit mean? It's currently on limit. What does limit mean? Limit means, let's say you want to buy a coin, and that coin is $100. Okay, you want to buy that coin, but you feel like, no, $100 is high. I want to allow that coin to fall down to, let's say, $50 before I will buy it. Okay, like the price is high, so let the price drop down to like $50 before I will buy it. Are you getting it? Now you can now say, okay, the limit you are placing, you will fix limit there. Then you now say, okay, let the price drop down to, let's say, $50 before I will buy it, for instance. Okay, but if you are choosing market, you're trying to say the commodity is currently $100. You are saying, yes, I want to buy it at that $100 straight. I'm not waiting for anything. Now let us use a practical example here. Now look at the current price of this Dodge USDT. The current price is this, right? 0.264 45. Now you want to buy this. If you want to buy this, you want to buy it at this current price of 0.2645. Now it is good you keep it at market. You're trying to say, you're telling the exchange that I'm buying this coin at the market current price. Is that okay? But if you want to say, okay, no, I want this market to drop to, like, let's say 0.25 or 0.22 before buying this Dogecoin, then you will come here and click on limit. You're telling him this is the limit I want. Then you now put in the limit you want, 0.2245. Okay, let's say, okay, you're telling the market that please don't buy yet, don't buy this coin yet for me at this market price of 0.26445. Hold on until the market limit itself or comes down to 0.2245, then you will buy. So that's the essence of you entering what limit here. Is that clear? Now that takes us to market value, or the other value. Now look at this other value. The other value is how much do I want to buy this Doge USD? How much USDT do I want to buy this? Remember, this is the currency this is actually what we are buying here, Doge USDT. Okay, we want to use USDT, the money we have, to buy Dogecoin. Okay, so now how many USDT do you want to use to buy this Doge? That's the question. So this is where you'll be typing such here at your other value. Now, maybe let's say you want to use 1 USDT. Let me put 1 here. Let's say you want to use 1 USDT. You will not type in 1 here. Please take note. You won't type in 1. What you're going to do, you're going to say how much. Remember, you have leverage. This is your leverage, right? This is 25 leverage. So you're saying your $1 multiplied by 25 is equal to what? It's equal to 25. So what you're going to put here is 25. So now you are using 25 other value. So that's 25 is equivalent to $1 because of the leverage you are using. Let us confirm if we are right. This is the place you see the amount you are using to stake. This place. Okay. Now if you look at it very well, you see that this is it. $1.02. So it simply means this 25 other value is really equivalent to $1 if you are using leverage 25. Is that clear? Please, never you type 1 here. Never you type 1 here. If you are using $1, for instance, the amount you're using, don't type it outrightly here. You have to multiply the amount by the leverage. Whatever thing it gives to you is going to be your other value. So if I want to use $1, or let me say I want to use $2, I will say $2 multiplied by 25 to be 50. That means 50 is the other value for $2 if I'm using 25 leverage. How do you confirm it? Come to this place, you see $2. Is that clear? Yes. So let's proceed. Now the next one is to take profits. Next one is our take profits, TPXL. That is take profits. Now let us click on it. Now we want to take profit. Where are we taking our profit? Now if this market rises, if eventually this price, oh, excuse me please. Okay, if eventually this price hits this very point now, right, and triggers up and starts going up as I planned, where do I want it to stop? Where do I want to take the profit? At what position do I want? Okay, now that will take us to our structure. Let us go see our structure. Okay, so that you have to go and click on your candle, this other interface. Okay, click there so we can go there straight. Now what we were analyzing, this is actually a chart, the market structure. We call this place the market structure, where you can actually analyze all of these things we are saying. Okay, now you can see where the current market is. Now you see it on 0.26453. This is where the current market is, right? And now we are saying that, okay, if this market goes to our favor, okay, and start going up to our favor, where do we want to take our profits? Where? That is the TP. When I say when the market get to this place, to this 0.2848, please take our profit there. And please make sure, as you're taking all of these things, be writing them out. Write out where you want the market to enter. Write out where you want to take your profit so that you won't be turning upside, you won't be confused. So now I want to take my profit at 0.2848. That's where I want to take my profit. Is that clear? Now, where do I want to take my stop loss? Stop loss simply means let me widen it, sorry. If this market didn't go as I have planned and the market decide to go down, for instance, that means I'll be losing money, right? Because I am saying that I want it to go up. And now the market has decided to be going down. That means I guess my prediction. Now, what happens to my money? My money will be going low. But if the money will continue to go low, except I say, okay, no, stop going low. I want you to stop at a particular position in case the money goes against me. That is your stop loss. So you want to stop it even if you're not with your phone or your laptop, or you're not with your system and this thing has started going. In your absence, even when I'm not there, please stop it for me. It shouldn't go beyond this level. All right. So now that is what stop loss actually means. So now I'm saying that if this market didn't favor me, it should not keep going low. Like, it shouldn't just keep going low, because it will liquidate me. It will take away the whole $3 I have, or 5 or 10 or 50 or 100. It will take everything away. Okay, now I'm saying I want to place a stop loss somewhere so that even if I'm not there, once the market goes against me, it should not pass that level. It shouldn't cross that limit. Okay, so let's assume now I am fixing my stop loss at, let me go up a little so that let me say I'm placing my stop loss at just exactly under, let's see, somewhere here. Okay, somewhere here. Let me go up so that we can get it very well. Sorry, please, if you can see my screen. Okay, good. Okay, now I say if the thing didn't favor me, please, if it comes to this place, it shouldn't keep going down. It should just stop somewhere here. So I'm going to take the value of that place. Let me use my arrow. Okay, this is the value of where I want it to stop. And the value of my stop loss, let's say it is 0.22831. Is that clear? Now, therefore, let me go back to the other book. I'm clicking up. Now let me place my take profit. Remember where we are. I said take profit will be 0.2745. Then my stop loss, I will be placing 0.2282. Okay, or 83 hereabouts. Now, having done that, I have been able to I've filled all of this. Now I'm going to enter it. Okay, now I'm going to long it. Longing simply means I want it to go up, remember. So I'm going to press on long, which is this place. You can see it on long. I'm longing it here. Okay, so I want to click on long, saying I want to long this market. I want to buy. Buy means longing, while shorting means selling. So I want to long this market now. So I will click on long it. Now it won't ask me to confirm if I'm okay with all my entry. I say yes, I'm okay. I click on that. Now it has successfully placed this order for me. But look at what happened. If you look at this order here, you will see that, look at order here. Wait, let me zoom it, sorry. Let me go up now. Okay, now if you look at this order here, you will see that I have this order. I have like 4 orders. I have placed order. It's not like you went to a restaurant, you placed order, but the food have not been served, right? So I placed order, but once the food is served, it will be positioned. The position will now highlight itself. Now, this trade have not started going yet. The reason is this. I said that if this trade gets to 0.2245, let the market start. But look at, the market has not yet, this where it is currently, it's here currently, okay, at 0.26. It have not even gotten to 0.22 yet. So that is why it is still awaiting. It's still awaiting. That's why it is at order. Once this price here gets to this price here, gets to 0.224, once the market price gets to 0. That's my limit price, the market will automatically trigger. And when the market triggers, my position here will indicate itself. This position here will indicate itself. Okay, so that is it on how to place a trade, whether on future, especially on future. Okay, the only difference between future and spot is that in spot you don't use leverage. You type in directly how much you want to use. Just here you type it in directly. You don't multiply it with this leverage here, because you won't even see leverage in your spot. Okay, you type in directly. So that is the difference. Aside that, every other thing you do is the same thing. Whether you are also putting your stop loss or take profit, you can still do the same in your spot. Is that clear? Okay. So next is the strategies for trading. What strategy do we need for trading? It's important you know the strategy for trading, because if you don't have a strategy for trading, you will just keep losing money. You will just keep losing money. There are strategies you need for trading. So next, we'll be talking about the strategy for trading.